Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, where we unpack the latest developments in the digital asset space. Today, let's dive into a fascinating story about Bitcoin's recent rally and its potential impact on altcoins. Bitcoin's price surged to new heights last May, briefly surpassing the levels seen earlier this year. Although prices have since consolidated, Bitcoin remains within striking distance of its all-time high, defying macro uncertainties, low trading volumes, and market skepticism. But what drove this historic breakout? Three key factors contributed to the recent BTC breakout: central bank optimism, institutional inflows, and easing political risks. Futures markets suggest that rate cuts from the Federal Reserve are likely in the second half of 2025, with the Eurozone even further ahead. This easing backdrop has revived risk appetite across assets, particularly among institutional allocators. Spot Bitcoin ETFs, approved earlier this year, continue to absorb flows. While daily volumes have tapered from launch week highs, net inflows have remained consistently positive, particularly from fee-sensitive RIA and private wealth channels. Year-to-date, cumulative inflows exceed $16 billion, with May recording the largest inflow this year. Meanwhile, MicroStrategy and other companies have continued to pile corporate treasury assets into Bitcoin. Easing tariff tensions and improving global trade sentiment helped stabilize broader markets, allowing risk assets like Bitcoin to resume their upward trend. However, despite these tailwinds, the rally occurred on relatively thin volumes. Bitcoin dominance has now climbed above 54%, up from about 38% in late 2022. Historically, BTC dominance peaks before altcoins begin to outperform. If history holds, the rotation from Bitcoin into altcoins may already be underway. Ethereum's recent outperformance, posting an 81% rally since its April lows, is a sign that sentiment is starting to spill over from Bitcoin to the altcoin market. Some real indicators worth watching include institutional broadening, L1 innovation and narrative cycles, and DeFi resurgence. Allocators who entered BTC via ETFs are now evaluating broader exposure. Equal weight or smart beta indexes that offer diversified exposure to Layer 1s, DeFi, and infrastructure tokens are gaining traction. L1 ecosystems like Solana, Avalanche, and Near continue to develop real throughput improvements, which are increasingly relevant as user demand for on-chain activity returns. DeFi has also seen a significant recovery, with the total value locked in protocols surpassing $117 billion. While there are diversification benefits associated with crypto investing, it's essential to acknowledge that crypto is still behaving largely as a risk-on asset class. As highlighted by the latest OECD report, the global economic landscape is becoming increasingly fragile. For advisors, expect rotation if prior cycles are a guide. Diversification matters, and equal-weight crypto baskets or thematic exposures may help capture upside without betting on a single asset. Stay objective, and fundamentals, from network activity to developer momentum, should remain the North Star for allocation decisions. Bitcoin's new all-time high is certainly a milestone. However, it may also be a signal. The next phase of the cycle could belong to the broader crypto asset class. Advisors who understand the timing and mechanics of market rotations are best positioned to guide clients through the next leg. Thanks for joining us on this episode of Bitcoin Bulletin. We'll continue to bring you the latest insights and analysis on the digital asset space. Don't forget to subscribe to our newsletter, Crypto for Advisors, every Thursday, and follow us on social media for the latest updates.